Eric Mother, Mother.com, with another MACD and a little bit of RSI educational video here. We're taking a look at the hourly chart for the S&P 500, and just go back to this series here in the MACD where we are insisting that before a stock can move, both MACDs need to be above the zero line. And we can see here that at the lows here, this is, now we're taking a look at the hourly chart, and this is 3 months worth of data. So 3 months, so we can see what we are doing here. 3 months worth of data on the S&P 500, and what we are going to be discussing is this low here, which also happened to correspond with both MACDs at that particular time frame, beginning of October 2015, somewhere around. Let's draw this again. The MACDs both were above zero right there, which corresponds with this period in the price somewhere around here at about 1900, and the stock market did go to record at least another 80 to 90 points on the S&P 500. So nice gain. And the key here is, so both MACDs moved above zero here, and this MACD here held support above zero. So let me take all those lines off and show you what I'm talking about. Number one, we had a slight higher high in the MACD here, in the main MACD, moving above that previous high short term and back above zero. And the other MACD had gone above zero, came back and tested the zero line and held and bounced. So we're talking about these lows here just under 1900. The market did go on to see a nice bounce. While all that was happening, there was a couple of other indicators of potential bounce. As you can see here, the market made a good attempt to hold or break these levels. The market held. While that was taking place, with the retest in the price, you can see the RSI during the same period made a higher high. So that's improving RSI strength. MACDs also made a higher high during the same period. And also we see that the other MACD did the same thing. So the strength and the momentum was flipping a little bit to the upside while markets were making this test in price. And it is subsequently when both MACDs were back above the zero line that the market did have this move, this period here, this successful move there. Lesson here is, short term, for your markets and for your instruments that you're trading, they need to show that they are above zero on their MACDs at the very least. And so the question you posed for me was whether the VIX was at support, and my response was actually based on the fact that yes, it is come off the highs. This is the VIX October 6, 2015. But if we use the MACD principle that both MACDs need to be above zero for momentum, you can see here both MACDs are below zero, which means there's no upside sustained evidence of momentum. So from a timing perspective, just right there, you have to avoid the idea right here, because you'd rather wait for both MACDs to move back above the zero line or hold above the zero line before true momentum can be seen. For example, you take a look at this period here, which began sometime, let's call it around August 17th. All right, this period here, very instrumental period. I want to show you what happened so we can. So around August 17th, market was trading here. We went on a very sharp move here on the VIX, and that also corresponds nicely with the fact that at that particular point you can see that both MACDs held here above the zero line and here above the zero line. So both MACDs were holding above the zero line right there, and subsequently you can see that they continued pushing above zero, and that's when you get that spike in price. So obviously in the current market, if this market is to start pulling back, and if you're thinking of timing the VIX on the way back up, if there's a move in the VIX short term to be had in terms of a move higher, obviously the first thing you want to observe is be very patient. It might take days, sometimes even weeks. It's tough to tell, but you have to wait for your MACDs to reclaim the level back above the zero line before you can get any type of short-term momentum move. Remember, this is the hourly. For those of you who are trading short-term, that's what you have to insist on. If you're trading longer term, then you have to insist that the dailies MACDs are above zero. If you're trading even much longer, you have to insist that the weekly MACDs are above zero. And if you're trading even longer, you have to insist that your monthly MACDs are above zero. So depending on what time frame you're trading, you want your MACDs to be above zero, and it is best if they're just now moving above zero, so you can get a little bit of a early entry like here before they finally get into a nice groove where they are spiking above zero and showing a nice momentum run. So depending on your time frame, make sure that the MACDs are above zero for true momentum. Eric Mwadid with Mwadid.com. As always, good luck, peace, and blessings. EACS. Yes, 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 yes. Oh, boom.